Just in case you were wondering, you can use multiple time frame strategies like this in any market, the forex, the stock market, the futures market, just as long as price is involved. This is the format in which we'll tackle how we'll use multiple time frames for swing trading and position trading. First, we're going to be talking about the situations that multiple time frames will help with, such as false breakouts and being on the wrong side, by giving examples. Second, we'll break down the concept by using analogies so it'll be easier to digest so you can visually see what's going on. Third, we'll tie it together by going through real examples. We'll then tackle the points in which you should understand after watching the video. And last, we'll take action steps, and I'll give you some at the end of this video to help you improve and make sure that you understand the concept. If you're serious about trading, you won't skip the end. Okay, let's get right into this. Let me show you something. I used to use only one time frame as a beginner trader. This is a chart of Paycom. This stock doesn't really matter, but the concept does. After a support break, I'd look at the stock I was trading and say to myself, this has to be a great opportunity to go short. We have lower highs and lower lows. This is an obvious downtrend. I'm so lucky to get in at the start of this trend, and at the moment, the market decides to go my way. Then suddenly it doesn't, as though it felt like the market was watching me. The stock decided to turn around completely and go the other way. I mean, really go the other way. And I was left there thinking, well, what the heck happened? So then you take another trade and the same thing happens. So what the heck is going on here? Let's use an analogy. Take a look at this. What's this guy painting? I'll give you 2 seconds to guess. The correct answer is you don't really know, but if we zoom out, we realize they were little happy trees at the bottom of the painting. But he's not painting trees. The overall idea was painting a mountain landscape. When you're trading and using only one time frame, that's exactly what you're doing. You're so zoomed up close, you can't even see the forest beyond the trees. You can't even see the direction of the overall market and where it's headed. When he's painting, he has an overall idea of where he wants the big picture to go. Let's say that represents the higher time frames. The larger time frames will have pullbacks, but the overall higher time frames has an idea of where price wants to be. Now, when we were zoomed in watching him paint the trees, that's one piece of the overall bigger picture. All those little trees or lower time frames has to eventually come back to complete the bigger picture. In a way, we want to trade in the way of the larger time frames or the overall bigger picture. Remember that Paycom short trade that we did on the 4 hour? Well, that was one small pullback in the overall big picture of the weekly charts. Though the 4 hour was making lower lows, the week was not done creating its uptrend. The pullback on the 4 hour turned out to be a higher low on the weekly chart, still going up. And what does a higher low on the weekly charts usually mean? Well, a higher low usually means the chart still wants to continue going up. This whole time I was trading in the wrong direction. Now yes, we're talking about the weekly time frame, so if you switch to a smaller time frame, chances are you could short the stock and make some money. But trading is about higher probabilities, and chances are, most likely, that trade will end up reversing, just like the two stocks that we just showed you. Now that we can conceptualize this, how do we use this in the everyday world? First, we need the overall bigger picture or bigger time frames. I like to swing and position trade, so I like to use the monthly or weeklies. In this case, I'll use the weekly as a general direction of the market overall. Also, though this chart is rare and has such obvious dips, it shows the ideal situation to be in when swing trading. This is Enphase, a solar company we like to talk about and trade a lot. If we wanted to start a position, we want to make sure that the stock is in a clear uptrend. Now, we don't really need any indicators to tell us which way it's going. See the higher lows the stock is making? Technically though, we didn't know the stock was in an uptrend until about here on the weekly. Then after that, the stock made 3 more lower highs, and the one that is to be determined if it's going to be another higher low to keep the trend going. Now, if you're a beginner and you have trouble seeing the trends, I'd recommend adding the 200-day simple moving average onto the chart. If price or the candles are above the 200-day moving average, overall, we are in a long-term uptrend, meaning the higher probability trades are moving upwards or going long. So every pullback will be a buying opportunity, most likely. Okay, at this point, you should know the direction of the trend and how to find it. At this point, that means you want to drop 1 or 2 time frames down in order to find a possible entry. In this case, we will head to the daily charts. You can also head to the 4-hour chart, but let's keep it simple and use the daily charts. Now, there are other indicators out there to show you when to enter, such as the RSI, which we're making a video on it. But this is a different way of entering into a trade. So if you're interested in the RSI and how it works and how we use it, subscribe so you don't miss that release. This is the daily chart. It looks like the weekly chart, but has a lot more candles. That's because for every 1 weekly candle, it's built up of 5 daily candles. Here are the 4 dips and the 1 unknown dip recently that we saw on the weekly chart. Again, looks the same, just more candles. Okay, let's cover the basics of what we're looking for. Because we know the weekly is most likely going to head up or head long, and it's in an uptrend, we're looking for buying signals. So what are they? We have many videos on different strategies, but they all look for the same thing: support after a really gnarly fall. So what does this mean? Now, if you're new to support and resistance, we won't go much into the details in this video, rather briefly go and give you enough information so you understand what's going on and what I'm seeing through my eyes. The support and resistance area is not a line. I'm going to repeat that because everyone keeps drawing lines and expecting support to be one single price point. Support and resistance is not a line, it's an area. Let me give you one more strategy and analogy to support and resistance as a bonus concept, because this is so important to understanding the rest of the technical analysis series. When you go out and you buy a car, you have a price in mind that you want to buy it at. You do your research and you compare it to other dealerships and also sketchy places on Craigslist. Everyone does their own research and values the car at a different price, but they all come up relatively close to the same intrinsic value of what the car should be worth. And most of the time, price that people are willing to pay for it are relatively close to everyone else's research. Because of that, you get people buying at various different price points, but they are around the same area of what the car should be worth. You get an area of different price points in which people bought it at. Trading stocks is the same way, only as traders you aren't the ones doing the research. Wall Street and the institutional investors are doing it for you, like Berkshire and ARK Invest. So you leverage on their homework that they did and you analyze it through price action. So for example, this is where the fundamentals and technicals come together that I always talk about. Take this first dip here. Instead of end phase stock, let's relate this back to the car analogy. A car dealership is trying to sell their car at this price point, but can't get anybody to buy. Other dealerships and sketchy Craigslist is offering it for cheaper. So now dealerships have to drop their price. Because it turns out the car really isn't worth the value that the dealership is trying to sell it for. Now, at this point, price starts to fall for a few weeks actually, until one day those people in the markets that did their research are looking for the same car and says, yep, that's around my price point and I'm gonna start to buy here. So then we get a scattered area like this. All those red and green candles or dots represents different price points at which people bought the car at, since the car or the stock is becoming more fair. See how price is starting to move sideways after that gnarly dip? That's because bigger institutions are starting to hop back in to support the price, because that's what the research tells them. This represents a support area, not a price point. Support and resistance and pullbacks are making sense a little bit more, huh? Let's move back over to stocks. This means that investors on Wall Street are moving billions of dollars and are willing to take the risk, and most likely the stock won't fall any further around this area. I said most likely. There's still risk involved using this strategy. Now, this is where the two charts come and relate to each other. Remember, we know that the weekly is moving up, and now we know that the lower time frame has stopped falling. This means that this could be a possible area to buy and head back into the uptrend of the weekly. And this pattern shows up again and again and again. I know, as a beginner trader, this might have been a lot to take in. So here are some key points you must take away from this video if you want to be successful using this multiple time frame strategy. If you don't say yes to all these key points, go back and rewatch the video. Messing this up could have you trading in the wrong direction again. First off, you should be able to choose a time frame and figure out which one is the entry time frame and which one is the trend time frame. Second, you should be able to tell me why we use multiple time frames and what the purpose of them are. Third, you should be able to tell me how to find support and resistance and what time frame to use the strategy on. Fourth, you should be able to know what tools to use and what time frame to use to identify the trend on the trending time frame. And last, if you want to answer all three of those in the comment section, I'll comment back letting you know which answers you got right and which answers I'd build on in order to head in the right direction. Okay, so here are the action steps that if you want to get better at trading, you need to take. This will be for people who want to become more profitable when they trade. 1, subscribe to this video so I know to make more videos like this, and this video had an impact on you so I can keep making this series. 2, find me 2 more stocks trending on the weekly and tell me how many pullbacks it has since it's been trending. And 3, feel free to comment down below those stocks and I'll tell you what I see as well. Let me know if you have any questions, but I'll see you in the next lesson. Peace out.